So you're completely new to trading and you want to get through all of the BS and you don't want to spend hours and hours and hours watching videos upon videos upon videos and still you're left with so much information you have no idea what to do with it. Well, luckily for you, I've been trading for over 12 years. I live stream daily on YouTube, on this exact YouTube channel. And in this video, I'm going to get you from 0 to 1. I'm going to give you everything you need to start trading immediately. If you haven't noticed by now, I've set a little timer on your screen, and by the time that timer is up, you will literally be able to go and place your very first trade and start day trading today. No BS, no fluff. Let's get into it. So really quickly, you're probably thinking, how do you even make money trading? Well, essentially, you're getting paid to push buttons, buying low and selling high, or in some cases, you can even bet that the price is going to fall and you sell high and buy low, but we'll get into that a little bit later in the video. But essentially, your job as a trader is to take advantage of price movements in whatever market you're trading, which by the way, everything in this video is meant to apply to all markets. Whether you're trading forex, futures, stocks, options, it doesn't matter. This is going to cover the absolute basics for all markets. So your job as a trader is essentially to buy low, sell high, make a profit. If you buy something for $1 and it goes up to $2 and you sell it at $2, guess what? You just made a $1 profit. That's essentially what we're trying to do as traders, is take advantage of price movements in the market. Now, this platform that I'm on right here is a website called TradingView. This is essentially where you're going to actually look at the charts. I know by now you've probably seen at least some sort of chart and somebody clicking buy and sell. This is pretty much the website that everyone uses. It's the golden standard. It's called TradingView.com. Of course, there will be a link in the description down below to access it. So this is going to be part one of your trading journey. You need to be able to look at charts. You need to be able to see what price is doing. If I wanted to trade, for example, Apple, all I would have to do is type in AAPL, because that's the symbol that Apple trades under. Or in fact, I could just look up Apple, and then right here we can see Apple stock. And let's just go ahead and click on that, and bada bang, bada boom, we have the Apple charts, okay? Now, on the top left, you'll notice that there's different time frames. There's different numbers here. So essentially, you want to pick what you're comfortable with. If you're a day trader, you're going to want to usually look at the 1 to 5 minute time frame. So for example, we have the 1 minute time frame here, but if I were to switch to the daily time frame, we're going to see a completely different chart. So whether you want to trade Apple, whether you want to trade Amazon, whether you want to trade forex like the US dollar, whether you want to trade futures, you're going to find all of those charts right here on TradingView. And if you don't know how to find it, just look up on Google, what is the ticker symbol for Apple? What is the ticker symbol for the NASDAQ? And you'll get something like this right up here. And this is what we call the ticker. It's essentially a 4 or 5, sometimes 6 letters that identify whatever you're trading and pulls up the chart, okay? Now, speaking of the chart, this is a line chart. Now, this is not ideal for day trading, at least not the way that I do and most people do on the internet, okay? We want a little more detail than the line chart because this does not paint the full picture. So if you want to be in the big leagues, you're going to have to use what's called a candlestick chart. Right up here in the top left, we can see we have these little symbols right here. We're going to click this right here, candles. And now what we're going to see is probably what you're a little more used to seeing if you watch any trading content on YouTube or Instagram or TikTok. Okay, these are what are called candlesticks. Candlesticks essentially just give you the highest point prices reached, the lowest point prices reached, where price started, and where price ended. So let's take a look at what's going on right now in real time, because it's probably the best way to actually learn. So these are each one candlestick representing whatever time frame you're on. So if you're on a 1 minute chart, each one of these candlesticks is going to represent 1 minute worth of time, or 60 seconds worth of time, okay? So price is moving 60 seconds at a time, right? So candlesticks are called candlesticks because you see these long little lines here. These are called wicks. So there's the body of the candle, which is the red or the green, and then the wicks of the candle, which are essentially the extremes of where price has been. I'm not going to go super in depth onto how to read candlesticks, but essentially all you need to know is that you have the extreme points of where price has reached within that time frame. So let's say in a minute, we're on a minute time frame. Right now, we've currently hit a low of right there, which is around 23,842. And we're currently right here. And as we move lower, as price moves lower, now you can see our lowest price is lower. And the highest price that was reached is right here, which is 23,848. Essentially, the wicks are telling you the highest and lowest points, and the body of the candle, the red or the green section, is telling you where price started and where price ended. If price started lower than it ends, then it's a green candle because it's moved up. If price starts higher than it ends, then it's a red candle because it moved down. So you're going to see more red when price falls and more green when price is rising. This can be really useful information because, for example, if you see a long wick, just like we see here, if we see a bunch of long wicks, that essentially means that price came all the way down here, but finished all the way up here. So what does that tell you? People were buying in that area, okay? So that is the basics of candlesticks, the absolute basics. Obviously, if you have no idea what you're doing, go watch some more videos on that, but this is not meant to be a candlestick guide. Now, you may be wondering how I'm drawing on the chart. And the reason why many people use TradingView is because it is super easy to draw on and use their tools. So on the left-hand side here, you're going to have a bunch of different options for your tools. For example, the drawing tool is right here, and if I use that, if I just hold down and click, then I can draw. So I can draw lines, I can draw circles, whatever I want to draw, right? Now, let's say we wanted to mark out an area on our chart, for example. We can go and expand that by clicking that little button there, and then we'll click on rectangle, and now we can draw rectangles. And if I wanted to edit the way this looked, I would right click on it, go to settings, and here you can have a whole bunch of options for customizing your drawing. So you have your tools on the left side. Now, let's say you don't want to keep searching for those tools over and over again. Well, you have the option to favorite those tools. So you go here and press that star button, and now it'll pop up in this little toolbox right here at the top. And now you have all of your tools ready to go at a moment's notice, so you can draw the nicest boxes and the best circles. Now, lastly but not least, there is the watch list functionality of TradingView. So for example, if you want to watch a specific stock, you can create your own watch list on the right hand side on TradingView. And for example, I'll go to my portfolio right here. These are all the stocks and crypto and whatever I'm holding. And if I wanted to add something, let's say I wanted to watch Apple, I would simply click the plus icon on my watch list, which is on the top right, and then I would search Apple and click this plus icon here, and it will add it to the watch list, as you can see right there. And then there's a whole bunch of other features where you can, flag them, so you can color code whatever you're watching. So that is essentially how you use TradingView, which is the charting component. This is how you analyze something. This is how you decide whether you want to buy something by looking at the charts, right? Or maybe if you're using news, well, you're probably not going to be using TradingView. That's probably CNBC or something else. But we specifically focus on technicals on this channel, so that is going to be TradingView. But now you need a way to actually place trades, right? If you're on TradingView alone and you have nothing else, you're not going to be able to actually place any orders. You're not going to be able to buy. You're not going to be able to sell because we don't yet have what's called a broker, okay? So essentially what a broker is the person that's actually putting in your transactions. So let's say that I want to buy $1 worth of Apple stock, okay? Or $1 worth of a futures contract, whatever it may be, $1 worth of a crypto. Okay, here's me. I'm this little man right here, and I have my $1, but I can't actually go and make that trade myself. I would literally have to go to the New York Stock Exchange, for example, and make it happen, which obviously people are not doing that themselves, right? So what you do instead is you hand over that money to your broker. So let's make the broker, let's give him a little business hat, right? He's looking really nice and professional, but he's gonna be sad because he's a broker. Okay, you give your dollar to that broker, and that broker then goes and actually makes the transaction and gets you that, let's for example say stock, right? So let's say you get that stock certificate, 1 share of Apple. He's going to be the one that actually puts your dollar through, and then you will receive that share or whatever you were buying in exchange, okay? So now brokers are not actually physical humans nowadays, at least they were in the past, but nowadays they're online brokers. So there's a bajillion different online brokers depending on what you're trading. So if you're trading something other than futures, which is what I focus on, then just Google, best forex broker, best X broker, whatever you're trading, right? Crypto, forex, futures, stocks. But I can name a few to get you started, okay? So for futures, there are a couple brokers that most people use. One would be NinjaTrader and the other would be Tradeovate. So these are the most popular ones. For Forex, there is Awanda. I'm not really sure of too many other brokers. And for stocks, the main one is going to be Robinhood, okay? This is by far the best for beginners. Robinhood is a stockbroker. So these cover futures trading, this covers Forex, and this covers stocks. So these are basically the brokers, the people that will actually let you hit that buy button and sell button so you can actually make your trades, okay? Now, there's also another element to trading that has recently exploded in the last couple of years, and that is going to be prop firms. So instead of, for example, you having your dollar your personal dollar, right? Let's draw it out again. You have your $1 bill, and let's make it $100. You have $100, and you want to go trade the stock market, okay? Well, what if I told you there was a way to avoid using your own money, and instead you now have a company? Let's draw a company, something like this. Give it some windows. That just looks like a person. Whatever. A company will actually, here, house, company, give it a door. The company will actually give you this $100 of their own money so that you can trade it and make money and then split the profits with the company. That is what a prop firm is. So essentially, instead of going and putting $100 of your own money at risk, you can pay a company such as a prop firm, okay, you can pay them a small fee up front. So let's say you give them your $100 by purchasing an account from them. They will give you, for $100, they will give you, let's say, a $50,000 account, okay? So you basically buy $50,000 worth of trading capital for $100. Now you're probably asking yourself, that sounds too crazy. What's the catch? Well, the catch is that you don't get access to this capital right away, okay? So obviously the firm is not going to just give you that money for $100 and let you go rampant with it and lose all their money, okay? That's not how it works. Instead, most prop firms will give you an evaluation account, which is essentially $50K of demo money, which is fake money, right? Computer money. It doesn't actually exist, but it acts like real money, okay? And essentially, they're going to give you that. You're going to have to prove that you can trade profitably. And then once you pass their test, their evaluation, which usually just means you have to hit a certain profit mark, then you can get access to this money. That's a whole nother video, but it is an option, and the option that most people, at least in the futures space, use instead of brokers, because why wouldn't you? You don't have to risk your own money. So the prop firms that I would recommend for this are going to be Apex Trader Funding when you're just getting started. Again, this is for futures trading, but there are prop firms for almost everything. So go and do your research. I'm just giving you what I'm familiar with. Okay, we have Take Profit Trader if you're a little more advanced. Okay, the best discounts for these two prop firms are in the description down below. Apex Trader Funding I would recommend because they have the cheapest evaluation account. Okay, so for like $33 usually you can get an account with them. Take Profit Trader is what I would recommend when you're actually ready to make some money trading with prop firms, because they are a little more expensive, but they are the more serious, actually willing to pay you your money if you make money kind of prop firm. Okay, they're the more legit prop firm, which is why they're more expensive. They're about $100 for an evaluation account, but they will pay you your money. Apex Trader Funding, it's a little bit harder. They have more rules, and it's just, do your research. You'll see that Apex Trader Funding is not the most trusted firm to pay you money, but they definitely are the cheapest, which is why I would recommend trying to pass an Apex Trader Funding account first, and then instead of paying them, go and pay Take Profit Trader and start your and get funded with them instead. Okay, that's a whole nother video. I got off on a little bit of a tangent there. Let's continue. So now what we need to do, now that we have our broker, we have our charting platform, which is TradingView, but then we also have our broker, which is going to allow us to actually place our orders into the market. Well, now we can essentially connect the two if we really wanted to and trade right off of the charts. So on TradingView, what you're going to do is go down to this trading panel. My head is covering it. Go down to the bottom left on TradingView, click Trading Panel, and what you're going to get is this. Okay, these are all the different brokers that you can connect to TradingView. Okay, so if, for example, you have Tradovate, you would click Tradovate and you would connect them. And it's basically, here's Awanda over here. And basically, once you connect your broker with your username and password, you'll be able to trade right on TradingView.com. So for example, I'm just going to connect to their practice account. This is going to be a demo account. I'm just going to hit connect, okay, and here's my demo account, okay, and now what I can do is basically pretend like I have a broker account connected. So this is if you want to practice. Now if their broker was connected, this would all be real. But let's say now I want to buy the NASDAQ, whatever I'm trading right here. Let's say I want to buy it right here at this low. I would right click, I would hit buy right here, and it's going to place an order to buy there. Now you also want to be aware of the size that you're using. So here is the size that I'm using. You can also adjust this in the top left corner. You can also hit buy and sell at the top left corner. But essentially what you want to do is click on wherever you want to buy and sell. As in TradingView, it's as simple as that. So you right click at the price that you want to buy or sell at. So let's say I want to buy at this price all the way up here. Yeah, you can buy at a higher price. I know. Essentially, what you do is you just right click, you hit buy, and it's going to automatically place that order for you. So when price reaches this level, it's going to buy at that price, and you obviously hope that price continues on higher. So if I want to buy down lower, I'll just right click and hit buy. If I want to sell or buy up higher, I will hit buy up higher, right? And I can even do a sell if I want to. I can hit sell here. I can hit sell here. Basically, it's as simple as right clicking and just telling TradingView what you want to do. Do you want to bet that the market is going to go down here and sell? So that means if price goes up here, then turns down, I will make a profit. Or do you want to buy up there and hope that price goes even higher? So if you buy, it's going to be blue, and then you would hope that price goes higher. Now let's say that I wanted to buy at exactly where price is at right now. This is what's called a market order. The other orders that I was placing were called limit orders and stop orders. If you want, go study order types. It shouldn't take you that long. But the good news is that TradingView automatically puts in the right order for you. So you don't really need to know whether to use a limit order, a stop order, or whatever. But now let's say that I wanted to do a market order. Okay, so that means that I want to buy exactly where price is right now. I would just hit this buy button here. And now you can see that my first trade has been placed. So that blue line is where I have bought. And if we look to the right here, you can see how much money I have made or how much money I have lost. Okay. So you can see I'm down about $6 right now because price is moving down after I just bought. Now let's say that I don't want to stay in this trade very long. And let's say that if price breaks this low here, I want to cut my losses, right? I want to limit my losses. Well, I'll go to this SL button that stands for stop loss. So think of it as like stop losing money. You're going to drag that and you're going to place it wherever you want it to go. Oh, wow. Price is tanking after I bought that. Okay. And so let's say that I wanted to put my stop loss down in here. Now we have that yellow order there, and you'll notice that it has a number right there, -31. That basically means that if price comes down here and touches that yellow line, it'll exit the trade for a net profit of -31, so a net loss of $31, okay? Now let's say that if price continued to go higher, right, and I start making some money, let's say I wanted to take that profit off the table. Let's say, you know, I want to actually get out of the trade for a profit. You would hit this TP button, which stands for take profit. And so let's say if price comes up back to this high point, I want to sell there, sell my current buy position. And you can see right there, it says +36. So if price gets to there, I would make $36, okay? So that is essentially how to use TradingView and your broker together. There are a bunch of other platforms that you can connect your brokers to. For example, I use NinjaTrader. So NinjaTrader is right over here, and it's essentially the same exact idea as TradingView. It's just laid out a little bit differently. So for example, if I want to buy down here, I'll just right click, go to buy, and boom, there's a limit order right there. If I wanted to buy, or if I want to sell up here, let's say, I would hit sell. Now there's a sell order. Exactly the same process, just a different platform. So there are charting platforms, there are brokers / prop firms. They connect to each other so that you can actually trade and look at charts at the same time. So you usually want to connect your broker or prop firm to your charting platform, whether that's TradingView, which is this right here, or whether that's NinjaTrader, which is this right here. Both have their pros and cons, but most people use TradingView. Now, this wouldn't be a great beginner's guide if I didn't leave you with a strategy to actually get started with. So the strategy that I always like to teach beginners first is essentially just getting you familiar on being able to analyze turning points in the market, aka imbalances between buyers and sellers. It's pretty simple, right? If there are more buyers than sellers, then the market will go up. If there are more sellers than buyers, then the market will go down, right? Well, if you can identify points in the chart where you saw a massive increase in buyers in that specific price area, then that price area is likely to be an area of interest in the future where price may bounce again. So instead of marking out, let's say, lows on a chart, right? And then saying, okay, well, if we get down to this low, price is going to hold because that's what we call support and it's going to go higher. Again, it worked in this case, but you know, I could point to 1,000 other examples where it does not work out that great. Instead, what I like to trade is areas that look more like this, okay? we see this candle right here. Why is that candle important? Well, it is much bigger than pretty much every single candle on this chart, which apart from maybe this one right here. Okay, so that tells us that right here, there was a ton of buying in that 1 minute time frame, right? So in 60 seconds, we went from here to here. It's a big jump, right? Just look at the chart. It's a big jump. So I want to see, where did that originate from, right? Where did that big move come from? Well, if we just take a look to the left, we'll see that we have this little candlestick right here, okay? So that's basically the candlestick before the big move, the origin point of the big move. And essentially, this is what we call demand, okay? You basically want to see a small candlestick followed by a massive candlestick to the upside, and that is going to act as support, okay? Think of demand as support and supply as resistance. What is supply? The exact opposite of this, right? Let's look at this candle right here. Massive dump to the downside. So we take a look at the candle to the left of that, the candle right before the massive dump. We mark that out with a box, and now this is going to be an area of supply where if price reaches again, it has the potential to move lower. Now, in general, what you want to do is take a look at the chart, and if it's going from the bottom left corner to the top right corner, right, like we are right now, then you're in an uptrend and you only want to buy at levels of demand. But if you're moving from the top left of your chart to the bottom right of your chart, like we are here, then you're in a downtrend and you only want to focus on levels of supply, areas where we dropped heavily. So in this case, we're in an uptrend, right? And we have our area of demand marked out. We spiked away from this level right here. And so now what we're going to do is look to buy at that level and look for a continuation higher. So let's play this forward and see what happens. Okay, we're coming in, and boom, we tag that area right there. Okay, so let's say that we just put a buy order right at the beginning of the area, put our stop loss at the bottom of the area, and we target the highs, right? So this is what's called your risk to reward. You have your risk, which is this red box here. So you're essentially risking that much. So in this case, if you look right here, it says 6.75. That means we're risking 6.75 points to the downside. And then our reward is 32.5 points. So essentially that comes out to a ratio of 4.81 to 1. So for every dollar I'm risking, I make $4.81, okay, if this trade hits that full target, okay? Now let's watch what happens, and ba-boom. There you go, your first ever winning trade. This is called a level of demand, and this is an example of a level of demand holding. Okay, so that is the strategy that I like to give newbies, is just look for these supply and demand levels, points on a chart that were the predecessor to a monster move just after, right? The origination point of the big moves. Mark out those origination points and you will have a better idea of where price may actually react. Now, if you want to learn how I personally trade supply and demand in a little bit more advanced way, it's what I trade on the live stream every single day. I'm going to leave a link to the Simple Trader Blueprint down in the description down below. That is my course. Now, before you watch that course or buy that course, make sure you watch my free bootcamp, the Simple Trader Bootcamp, which is my only playlist on YouTube. Go and watch that playlist after this video, and then if you need an extra push, check out the course, the Simple Trader Blueprint, okay? It goes into everything a lot more in depth. I wanted this to be a quick video on how to get started. I guess I can't make a quick video. I just keep ranting, so if you want to see even more ranting, go check that out. So now you have everything that you need to literally get started in day trading. If this video helped you, all I ask is that you subscribe, like, and leave a nice comment if you really want to. Otherwise, I'm sorry, but you're cursed with 10 years of bad trading. I don't make the rules here. Like, comment, subscribe, and I will see you in the next video or the next live stream.